Hi, it is Tuesday after the close, and we're taking a look at the S&P 500 as we get set to trade Wednesday, the 23rd. So, kind of a little bit of a rough day, today. Um, we saw some weakness in the futures over in general over the holiday. After futures had rallied up a little further after the close on Friday, all the way to 77.75, 26.77. 75, they came in a little weak and were trading down, and we really started to see sort of a line in the sand form at 26.65 on the futures, and that really was, just an inability to trade above that. And as of Friday, we did meet our measured move target of 26.67 on the S&P. We traded above it by about 10 points, closed above it, and then when I saw that move after hours in ES, take it up even a little further still. Sometimes that gives you the illusion that maybe there are people still left on the hook short that are still covering, and that we might get one more day of juice out of this. Plus, we had this downtrend coming down, so I thought we might come in and maybe trade up to here and then roll over. But no, we came in, we gapped down, open. Our open was our high of day and is now overhead gap resistance to Friday's close, which is our 2019 closing high so far. Taking Friday's high and the 2019 low and adding them together gives us a halfway back point for the year right now at 25.59, and our 20-day simple moving average is heading right there. Possibly tomorrow it might be right there at about 25.60. Definitely by Thursday, but maybe even by tomorrow, Wednesday. Our 50-day simple moving average was traded through today, but buyers came in and bought it back up, and we closed back up at about 25.32.90. So we were saved by the 50-day simple moving average. Our rising 10-day simple moving average is going to meet together with the 50-day tomorrow. It's going to make that buy signal on face value, but it might get treated as an as an overbought signal instead, which is what happens sometimes, and especially during bear markets when you have these really intense rallies that move the shorter average so quickly. It often times when it meets the other moving average, it gets treated the opposite way. It gets treated as as an in this case, an overbought event. So we'll see if we get follow through on this selling tomorrow. I think then we will see it quickly. We will see a break of the 50-day and the 10-day, which will be very close together, probably right around where our low was today, maybe just above there, somewhere between 26.16 and 26.20. And if we see a break of that, I think we've got this little gap to fill here near our scene of the crime level at 25.85. That's this little gap here to last, let's see, this was Friday, Thursday, Wednesday, Tuesday, last Monday's close, the 14th at 25.82. So our little scene of the crime level and a small gap to fill here. If that's enough to feed the beast and turn this around, then we're going to need to come back and take back the 10 and 20-day simple moving average combo. If that's not enough to feed the beast and we get even a little bit lower, we're going after the 20-day, which is going to be right in there in bed with our halfway back for the year. So what would have taken us the entire month to gain up to last Friday, the entire first 3 weeks of the year, possibly could be clipped off in 2 days. If we get all the way back down to 25.60 tomorrow. And I have to tell you that if we lose these simple moving averages, we've got nothing. We have got really nothing to hold us together, other than maybe going after and filling this gap here and making a higher low for the year and reversing off of that. But things are just not looking good in terms of that. If we wind up breaking through the 50-day, the 10-day, and then lose the 20-day as well, that's not going to be good. But let's assume for now all we're seeing is some retracement of the rally that we've had so far. And as long as I think we hold above 25.60, we're probably going to bounce and come back and try to take care of this gap at the very least, and then reassess there. Maybe by the time all of this plays out, we will be closer to earnings and so forth that are going on next week. And I also wanted to talk about real quick about the intraday chart that I was showing you today. We saw first off, okay, here was our gap down this morning. And first we tried to consolidate and build a little support here at gap support, which was Friday's low, because we came in with a big gap below us to Thursday's close. Once we slipped underneath that gap level, you can see we tried fighting to get it back, but then we rolled over here right as Europe closed up and fell, just sort of rolled over and fell on down. And when we fell down, we kind of vacillated here between we kind of vacillated here between bouncing off of 25.32. I mean, sorry, 26.32, and trying to make a move back up 10 points to 26.42, because that's where initially the lows were sort of trying to hold here when we slipped underneath the gap. So we had 26.47 to 26.42, and price turned back and forth there, and then we rolled over and fell down and broke down to 26.32, and then once we rolled down off of that, that became our little magnet that we tried to close back above at the end of the day. We were successful in closing back above that 26.32 level. But where that 26.32 level comes from is that it was our closing low. When I roll the chart to the left here and show you, that was our closing low right here on November 23rd. Previous to that, our closing low had been here from October 29th, the day that we put in that flush down to 26.03, and that close was at 26.41.25. So maybe there was a little hint of leftover anguish left in the algos today, and that's why that 26.42 level was kind of holding for us. But indeed, what was really key was this closing low that we made, this little tiny break of the closing low that we made here on Black Friday, November 23rd. And then from there, we bounced up into the December high, and we held on to this closing low. Even though we kept breaking and making these lows, we held on to that closing low all the way to here, December 14th, as we were looking into the Fed meeting on the 19th. Finally, we gapped down open. That's how we finally broke this closing low. So this was a really stubborn and strong level of support for the longest time at this 26.32. So that's kind of I thought that was kind of interesting that came back and haunted us today, intraday, and it probably will be there again tomorrow. So mark that off on your intraday chart. Keep an eye on it. To be exact, once again, that level is 26.32.56. It was a key closing low in our move down at the end of 2018, and obviously today we bounced around on this. We came back to it. We fell back off of it again, and we came back to close just above it, and our close at the end of the day wound up at 26.32.90. Okay, so if we end up gapping down tomorrow, obviously we'll have a problem. We'll have another reason there to trade back to that 26.32 level, and that we'll have a gap, yet another gap above us to fill. Okay, I hope that's enough information for one evening and gives you a good start to the day tomorrow. Have a good rest of your evening, and see you in the morning.